Hello and welcome to Morning Trade with Moneycontrol. I'm Karunya Rao and I'm here to help you navigate today's trading day with actionable strategies, sectoral trends and most importantly your queries during the show. So please keep those comments coming on our live feed. We'll have your questions addressed before we wrap. But let's kickstart by taking a look at what the global handover looks like. Stocks rally on Wall Street on Friday after jobs data for the month of December indicates inflation may finally be easing. Asian markets start strong after China reopens its borders. The SGX Nifty also indicates a higher start to the Indian market. All eyes are set on IT bellwether TCS, which is set to announce its financial performance for the third quarter. Other stocks in focus are IDBI Bank, Titan, Tata Steel. Okay, let's get going and discuss the technicals of the market with Rajesh Palvia of Axis Securities. Good morning, Rajesh, and good to have you on the show with us today. Let's understand what the trade setup looks like and the gap up open should be bought into or should one stay cautious?
Good morning, Karanya. So in the last week, we have seen, there was a significant supply pressure and both the indices have given a breakdown to their important support area. If you talk about Nifty, Nifty slipped below its 100-day moving average, as well as Bank Nifty also slipped below its 50-day moving average. So both the indices have given a negative, sentiment for the previous week. But though we have positive global cues as we are having positive opening for the day, but still looking at the overall setup for the market, 18,150, 18,200 are the major hurdle for the Nifty on the higher side. Until Nifty not able to cross above 18,200 on a weekly closing basis, we will remain in a range. 17,800 to 18,200 could be the possible range for some couple of days. And either side, the decisive breakout will give the clear direction from here onward. Even if we talk about the Bank Nifty is now slipped below 42,500 level, which was the important level. Now looking at the overall setup for the Bank Nifty also, 42,500, 43,000 are likely to act as a resistance area for any gap up opening or any pullback action from the current level. On the other hand, 42,000 is very important and critical support area for Bank Nifty. If at all Bank Nifty breaks below those level, then possibly it may extend its down move towards 41,700, even 41,500 level. So again, for the Bank Nifty also, we believe that some range bound consolidation we can see for some couple of trading session, and market will wait for decisive breakout for either side. So range for Bank Nifty would be around 41,700 to 42,800 could be the possible range for Bank Nifty. Either side breakdown will decide the further major move from here onwards.
Okay, all right. But given the fact that the SGX is pointing to a strong start, do you think Nifty Bank will also have to meaningfully add to that momentum for the index to sort of pick up sharply?
Yeah, surely. So both the indices will give some bit of short covering action. So for Bank Nifty, yes, if we able to hold above 42,600 in the gap up opening, and if we sustain above those levels, then some short covering action we can see in the today's session, because a lot of call writer was active at 42,500, 600 strikes. So if at all Bank Nifty manages to hold above 42,600, then possibly one round of short covering action we can see in the today's session. And for Nifty also, if we able to cross above 18,050, 18,100 level, then again we can see a short covering in Nifty also, because 18,000, 18,001 strike have witnessed a huge shorting on the call front. So that short covering we should be watch very closely in the today's session also.
Okay. All right, let's talk about some stocks that could be in news. I want to flag off IDBI Bank. Of course, even on Friday, we saw very strong momentum come by on the back of, getting one step closer to that stake sale. And of course, Saturday is when the government closed receiving EOIs for the company's majority stake sale. What we are given to understand, which is in Moneycontrol Exclusive, is that Emirates NBD and Canada's Fairfax Group, these two names have likely submitted their EOIs for a majority stake in IDBI Bank. Now, talk to us about the technicals after, sort of making those 7-8% gains on Friday despite the overall market momentum being weak. Do you think IDBI could build on to these gains?
So very strong buying action we have seen in the previous trading session for IDBI, and now stock is approaching towards its immediate resistance area of 61, which is the immediate resistance area. And looking at the longer term time frame, the major hurdle for IDBI is at around 65-66 zone, which was the October 2021 high. So almost looking at the overall setup on the daily, weekly, monthly time frame, stock is showing strength. And looking at the setup, we believe that this momentum may continue further higher from the current level. Also, those who are holding, they can hold their position for immediate target of 61 to 65. Now trail stop loss on the higher side towards 56. So keep stop loss of 56 for upside target of 61 to 66.
Okay, all right. How about Tata Steel? Now, companies have started giving out their Q3 business report, business update ahead of their numbers. Now, if we look at Tata Steel's Q3, India business production was up 4.2% sequentially, coming in at 5 million tons. Delivery volumes, however, were down on a QOQ basis by 3.5%. Europe business production was down 6.3%. However, the delivery volumes for Europe were up close to 5%, again, on a sequential basis. But if we look at purely the chart and the technicals of Tata Steel, what do they tell you?
So technical setup looks positive, though some corrective action we have seen in the recent past. But looking at the overall setup for Tata Steel, still stock is holding its previous breakout level. Stock is sustaining above all its important moving average, 50, 100, 200-day moving average, so which considered as a bullish stock for the near term as well as for the short term also. So till Tata Steel holds above 110, 111 level, it's an opportunity to buy stock in any kind of minor dips if it comes in the market. On the other hand, if its stock manages to cross above 120-21 zone, then possibly stock can inch up further higher towards 130-135 zone also. So overall setup for Tata Steel is bullish, is still bullish. If it breaks below 110, then only one should open some short position. But as of now, we recommend to buy the stock in the dips towards 112, 13 zone. Keep stop loss of 110 for your long position.
Okay. I also want to flag off Titan and Kalyan Jewelers again. Q3 update has come in for both of these jewelry companies. For Titan, the Q3 combined sales were up 12% on a year-on-year basis, and this is on a high base. The growth that they have shown, so likely to go down well with this trade today. They've added a total of 111 new retail outlets. Jewelry business alone has seen a good 11% growth. Now, if we look at Kalyan Jewelers, their Q3 revenue is up 13%. They've seen a revenue growth for India ops specifically of close to 12%. How are both of these charts stacking up against one another, and which one looks more attractive?
So Karanya, if we analyze the Titan, since last 3-4 months, stock is witnessing some supply pressure, and still looking at the setup for near term to short term, stock is trading below their important moving averages of 50-day, 100-day moving average. Again, in previous up move, we have seen some supply pressure was again there around 50-day, 100-day moving average. Stock not able to cross those levels. So until Tata Steel not crosses about 2630, 2640 level on a weekly closing basis, whatever pullback will come will meet to the supply on the higher side. On the other hand, 2500 is the immediate critical important support area for the stock. If it breaks below 2500 level, then possibly Titan can correct further, and possibly lower side target for Titan would be around 2450, which is the next important support area, and almost coincide with the 200-day moving average. So looking at the overall setup for Titan, we believe that some pressure we can see below 2500 for lower target of 2450. So even if you look at the Kalyan Jeweler, so Kalyan Jeweler have shown a good amount of rally in a couple of months. But still, looking at the near-term setup, stock is struggling to cross its 126, 128 zone, which is the last 4-week consolidation resistance area on the higher side. If stock manages to cross above 128 level, then it will resume its uptrend and possibly 140, 45 could be the target on the higher side. But overall, if you look at the setup for Kalyan Jeweler, it looks positive. Stock is almost trading near to its 20-day moving average. So looking at the setup, if it comes near to 115, it's a buying opportunity. One can keep stop loss of 112 to remain long in the Kalyan Jeweler. On the higher side, above 128, it may scale up further towards 140, 45.
Okay, all right. And the last stock on our list today, as far as stocks and news are concerned, is Lupin. They've received an approval from the US FDA for Festorodine fumarate extended release tablets. Now, Lupin has, if we look at the 1-year returns, it's still very much in the negative, down by 20-21%. But last few months, it has tried to sort of claw back to a decent point. Of course, it's still pretty much 200 rupees off its 52-week high. Is this the right time to enter into Lupin, or should one stay a little cautious of the way things are panning out?
So some recovery we have seen in the Lupin, and now looking at the daily setup, daily chart setup of Lupin, stock is making higher high low formation and series of higher top higher bottom formation is taking place. Stock is moving in up sloping channel on the daily chart. Stock is now trading above its 50-day, 100-day, 200-day moving average. So these are all a positive parameter for Lupin on the technical front. Though stock has corrected significantly in last couple of months, and looking at the overall setup, until stock not crosses above 800, 830 zone, it will remain under bearish territory only. Some recovery we can expect from the current level as near-term setup is positive. So if stocks continues to hold above 710 level, which is important level for Lupin, then possibly stock can inch up further higher towards 770, 780 zone, where again those who are trader can book the profit around 770, 780 zone.
Okay. Rajesh, request you to stay on with us. I want to also touch base with Gaurang Shah of Geojit Financial to talk about how the fundamentals of the market look like right now. Morning, Gaurang, and thanks for joining in.
Right.
There has been a massive amount of volatility in the market, and intraday volatility has been very, very significant and very, very sharp. What do you make of the market trend over the last 2 to 3 weeks? Has it been more of a buy on rally, buy on dips, or a sell on rally sort of a market?
Thanks, Karanya, and morning to all of you all. So I think if you're a long-term investor, we've been advocating call dips are a great opportunity to get into quality names and stocks and sectors. And if you look at the last 3 to 6 months, Karanya, either it is the Sensex or Nifty, 18,800 or at the levels where the Sensex is. We have been there a couple of times and we have kind of pulled off from those lows and we bounced back. We have curtain raiser for the third quarter earnings this financial year with TCS announcing the number later on in the day. And then for the entire week, you have IT heavy kind of earnings coming through. We have Infosys, HCL Tech, Sant Limited, Wipro, etc. By Thursday, Friday this week. So markets will possibly take cue from there. And of course, 1st Feb, we have the budget. And historically speaking, month of Jan has always been a little bit subdued. But we hope that this time around it's going to be different, keeping in mind the correction that we've already seen and the fact that we are at levels wherein we've been able to pull ourselves back on the higher side from the current level. So expect a pullback. Buy on dips is definitely a more prudent and sound strategy if you're a long-term investor. And I think one can expect a little bit of positivity from the IT sector earnings, which could possibly give direction to the Nifty and Sensex.
Right. In fact, I was getting to that. It's going to be a critical week for tech stocks, tech companies. We've seen a fair amount of volatility there as well. Largely, but however, it has been a downside coming in, a continued downside for IT heavyweights especially. Now that the numbers are going to be trickling in, how do you see things panning out for not just this quarter, but for perhaps another quarter or two for tech companies, which have a fair amount of exposure to global markets, especially US and Europe?
So, Karanya, let's face it, we absolutely are with that thought process that the remaining 2 quarters, that is the third and the fourth quarter for the IT sector, is not going to be easy. It's going to be challenging. It's going to be tough. It's going to be, driven by what are the outlooks going forward from here on, especially from the overseas market with respect to, the big ticket clients. And of course, where does the attrition rate stand and what is the number as far as the new headcount is concerned? We are also of the opinion that coming next financial year, that is 1st April 23 onwards, there is going to be slow and steady improvement in the numbers and which could possibly pull up the stock. And not to forget, Karanya, we've seen almost 25% plus correction in the IT index. Stock specific, you might have seen a little bit more. In terms of valuation, if you are a year and a half, 2 year kind of an investor, I think slowly nibbling into the IT stocks is going to be a prudent strategy. Constant currency and of course dollar revenue is something that will be challenging. And more importantly, the commentary from the management as far as the growth outlook is concerned. Of course, they have been very conservative. Even in the last couple of quarters, the kind of verbatim that has come through from the management is conservative. But I believe being conservative is always prudent and then over-deliver rather than give promises and not deliver.
Okay, but overall, how is the Q3 earnings scenario looking to you guys right now? Who will be the big outliers, sector-wise or stock-wise, anything as far as your projections are concerned that you can share?
So in terms of outperformance and continued momentum, I think banking and finance, hands down, they are going to be in the spotlight on the positive side. And if you only look at the verbatim that was given, I think last week by some of the management of banks, whether it is private or public, then their advances, the number on the advances, deposit, CASA, loan growth have been absolutely above expectation. So I think banking and finance is going to be the one. Auto selectively, you will see some numbers doing well. FMCG with the demand from semi-urban and rural India being a little bit stable, you might see positivities over there. And I think cement side, you will see a little bit of traction. On the downside, metals could be the one that could be a little bit of pressure. Along with, of course, we just mentioned about IT sector. This could be under pressure. And my sense is that real estate sector, company specific and stock specific moves will be there. But overall, could see some pressure from metals as well as IT. Pharma could be also there in terms of downward reaction.
You were talking about how January this time around could be different, because if we look at the past returns, historically since January of 2000, if we look at the average return of Nifty, it has been mildly in the negative, minus I think 0.03%. So what are the triggers this time around that could actually help us buck this trend and break that January jinx, especially ahead of the budget?
So I think it's always difficult, Karanya, short term, and budget is always something that the expectation grows, in terms of what the finance minister is going to do, whether it is market related slabs or whether it is individual tax slabs, etc., etc. But let's hope that the third quarter earnings, especially if IT is going to do a little bit better than what the expectation on. And let me tell you, street expectation on the IT sector is absolutely down and out. And if you have a little bit of positivity, then given the kind of weightage that the IT sector has, expect a little bit of positivity over there. And of course, some of the sectors which are likely to underperform, if they give you some better shade of color, then I think we should be relatively better off. And not to forget, like I mentioned, Karanya, if you look at last 3 to 6 months, then I think 17,800 or thereabouts on the Nifty spot. We have been able to, bounce back from the levels. And I think Friday, We went there a couple of times, close to that level of 17,800, 17,850. And we gave a little bit positive close, though we were down, but we were not at the bottom. So let's hope that this 17,800 on the Nifty spot remains to be a level wherein we have the capability of bouncing back. And just in case, like I mentioned, if the IT sector delivers, then I think you will have a little bit of more positivity given the weightage.
Okay, Gaurang, thank you so much for joining in and for wrapping up, all that's going on in the market, and especially ahead of the earnings season, how things are likely to play out. Back to technicals once again with Rajesh. A lot of queries lined up for you. The first one, of course, I want to ask about the IT space itself. A lot of people asking us about TCS, about Infosys as well. I saw one or two comments coming by. How do you see the technicals shaping up, today and the rest of the week? It's going to be a crucial one for IT.
Yeah, definitely. So major trigger will come from the results only, and looking at the chart also, the traders and as well as the short-term investors are also waiting for that trigger to play out. Still, structure is weak. Both the stock like TCS and Infosys is struggling to cross their important moving average like 50-day as well as 20-day moving average. So looking at the setup, both the stocks are still in the downtrend. For TCS, the important level is 3,300. If at all stock crosses those levels, then possibly some short covering, significant short covering we can see in the stock, and then possibly stock can move further higher toward 3,380, 3,400 level also. But overall, looking at the setup, we believe that stock is going to remain in range. 3,150 to 3,300 is a broader range for TCS. Either side breakout or breakdown will decide the major move from current level. So as of now, looking at the setup, we believe that some consolidation in range 3,150 to 3,300 would be there for some more time in TCS. Even if you look at the Infosys stock, Infosys is now trading below 1,500 level. So looking at the near-term setup, 1,500, 1,510 is the important critical resistance area on the higher side. If stocks crosses those levels, then some short covering action we can see in the stock, and then possibly stock can move higher towards 1580 zone. But looking at the setup, we believe that still stock is in pressure, and lower side major support for the stock for this corrective move is at around 1400 or 1380 level. If at all we breaks those levels, then possibly stock will resume its down move, and possibly lower furthermore lower target we can see towards 1250 also for Infosys also. So as of now, trend is weak. Let the results to come out, and then only we will see the major move in this both the stocks.
Okay. Let's shift gears and talk about a banking name as well. Prabhu is asking for short-term view on South Indian Bank. What's your view here?
So we have seen a strong momentum in last couple of week for the stock. Even on the monthly chart, if you look at the overall setup, it's a fourth, fifth month where stock is showing strength. Looking at the short to medium term setup, yes, stock is holding above 18 level, which is important for the stock on the near term as well as on the short term. So till stock is holding above 18, 1750, 17.50 level, stock is going to remain in the uptrend. And once stock crosses about 21 level, then possibly stock can inch up further higher towards 24 to 25 level. So view is bullish. Keep stop loss of 17.50 to hold your long position.
Okay, all right. So Mendra is asking about Ease My Trip. Of course, there's limited historic pattern to track here, but any advice that you can offer?
So looking at the limited data setup which we have, stock after a rally now is in consolidation. And looking at the near-term, short-term setup, we believe that if the stocks continues to hold above 48 level, then possibly on the higher side, stock can give a breakout above 56 level, which is very important for the stock to continue its up move. So keep stop loss of 48 above 56. You can add further more positions. And then possibly next target is around 65 to 70 zone on the higher side.
Okay. Trilok is asking us for a short-term view and actually for the long-term view both on GSPL, Gujarat State Petronet. Now, last week, it's seen a good momentum. Can it hold?
Yeah, there is a recovery in the stock, and it's a second week where it's a consecutive week where stock is making higher high formation. Looking at the near-term, short-term setup, stock is approaching towards its multiple resistance zone of 285, which is very crucial for stock on the higher side. So stock is gaining strength on the near-term, short-term setup. We believe that looking at the setup, stock can give breakout about 285, and if it's happened, then possibly stock can move further higher towards 310, which is the next target for the stock. So as you are holding stock for short-term perspective, keep your stop loss now at around 268. On the breakout of 285, possible target on the short term also to 310. If we analyze on the longer term time frame, yes, stock is in bullish zone. Once the stock crosses above 320, then possibly next long term target we can expect in the stock towards 380 to 400.
Okay, all right. Moving on to the next question. This is from Raja. He wants to know the view on DLF for the short term. Now, DLF again has fallen off a fair bit from its December highs of 418, 420 rupees levels. Right now perched just under 370 rupees a piece. Time to buy, or should one still be wary at these levels about DLF?
So if you look at the overall setup for the stock is consolidating in a broader range on the monthly chart. Like the range for the consolidation is 350 to 420 is the range for the stock. And again it's taking support from 350 zone and moving back to the 400 plus level. But on the near term setup, yes, stock is struggling to cross its 100-day moving average, which is placed at around 380 zone. So if you bought for very short-term perspective, keep stop loss now at around 360, which is its 200-day moving average. Keep stop loss of 360, and in the pullback book profit around 380.85 zone.
Okay. Another stock that has seen a good, reversal or recovery in the last 2 weeks is Prince Pipes. Now we have a query coming in from Krutik. Could you tell us how the chart is likely to play out in the next couple of months?
So near-term setup is suggesting some strength is coming back to the stock. Stock is consolidating in a tight range. 580 to 600 is the range where stock is consolidating since last 7-8 trading session. Any breakout above 600 can take this stock higher towards 675, 680 zone. But looking at the overall setup for short to medium term as well as for long term perspective, one should hold their position as the overall setup for the stock is bullish. Keep stop loss at around 540 zone. On the breakout of 600, yes, possibly stock will resume its up move towards 680, even 700 plus level. But it may take time because stock is still in consolidation on the consolidation zone on the monthly chart. So it may take time to give breakout on the higher side, but overall setup is bullish. So you can hold your position with stop loss of 540.
Okay. Raghav wants to know the view on REC. Now, last week it made a fresh 52-week high. The last few months actually have been very, very encouraging for the investors of REC. Talk to us about the likely way forward from here on.
Yeah, definitely. So REC, PFC both have done well, especially in last 3-4 months. It's a fourth consecutive month where stock is making higher high formation. It's clearly displaying that strength is there on the near term, short term setup for the stock. Even if we look at the near term setup, now stock is approaching towards its previous swing high, which was at around 129. If at all stock crosses above 129 level, then possibly stock will continue its uptrend towards 140-45 zone. So if you are holding your positions on the long side, remain invested. Keep now stop loss on the higher side towards 118. If stocks hold these level, then possibly stock may manage to give breakout over 129. Then possible target is around 140 to 45 can be there in the short to medium term basis.
Okay, all right. Narayan Venkatesh is asking us about GPIL. Now, this one has also seen a good momentum last couple of weeks, adding about 75-80 rupees on the upside. What lies ahead in future for Godavari?
So very strong setup on the monthly chart. Also, stock is making now, flag formation on the monthly chart. Looking at the overall setup for the stock, stock is poised for the breakout on the monthly chart. So looking at the overall setup, yes, you can hold your position. Stock is showing strength, and possibly stock can inch up higher towards 440, 450 zone in this continuation of uptrend. So keep now your stop loss at around 375, hold the position. Once stock crosses above 100, 410 level, then possibly next target is 440, 445 in the short period of time.
Okay. Before we wrap up, Rajesh, any stock that you want to flag off from your end that you're keeping on your radar?
So currently we are focusing on the fertilizer space, and we believe that fertilizer space can do well. So GNFC is first stock where we are bullish, and we expect that GNFC can move higher towards 620, 630 zone in the short period of time. One can buy GNFC with stop loss of 575. Another stocks which we like at current juncture is Havells. Since last 3-4 trading session, we are seeing long built up, and stock is making higher high formation. Stock is now trading about 20-day moving average, 50-day moving average. Looking at the near-term setup, we believe that Havells can continue upward momentum towards 1240, 1260 zone. One can buy Havells with stop loss of 1160. Another stock is from mid-cap IT, that is Sonata Software. Stock has shown strong momentum in last couple of trading sessions. Looking at the overall setup, we believe that Sonata Software can move up higher. 640 we are expecting on the higher side. One can buy with stop loss of 565. Another stock is from Infra Express, that is PNC Infra. A very strong buying action we have seen in the last week. And looking at the weekly setup, looking at the breakout on the weekly chart, we believe that PNC Infra can continue its upward momentum, and we are expecting target of 350, 360 on the higher side. One can buy with stop loss of 302.
All right. Thanks so much, Rajesh, for joining in and for flagging off a host of stocks that are your preferred picks and also helping our viewers out with their queries. Before we wrap up, I want to just flag off that we at Moneycontrol will be decoding TCS's Q3 numbers live from 5:30 p.m. onwards today. So don't forget to tune in. We'll get you an incisive analysis of the commentary, the fine print of the numbers, and of course a detailed analysis from experts as well on TCS's Q3 report card. With that, it's a wrap on Morning Trade. Thank you so much for tuning in.